Hi, you guys. Welcome. My name is Shaquan, and I am the trading educator at SLFX Trading. And in today's video, I'm going to be teaching you guys how to use the trend and the trend line to help gauge trend structures, such as the higher highs and higher lows, and lows and lower highs. So if that's something that you're interested in, make sure you first subscribe to the channel and make sure you guys leave a great comment and like the video. Okay, so I'm going to let the intro roll, and then we'll be right back. All right, you guys, so we're going to be going over Euro New Zealand dollar on the daily time frame because in the past few months, it's presented such a great example of the market condition and the market cycle of a downtrend and how to use a trend line to help gauge the trend structure. So if you've been following me, I posted a video about Euro New Zealand dollar about a little over a month ago. And then yeah, it was November, around November 6th, 7th, somewhere around there, right? And I basically talked about how we can have a very good possible sell opportunity. In fact, in which we did, and profits were taken. Okay, so I'll make sure to link that video somewhere on the cards, maybe up in the top right hand corner or down below, so that you guys can view that video. Okay, so I was able to use what I'm about to show you guys right now, such as trend lines, trend, and Fibonacci. So let me pause, you guys. Starting January 2nd, 2019, I will be hosting a masterclass called 4 Strategies That Profit. I'll be taking you guys through support and resistance, trend structure, trend lines, and Fibonacci to teach you guys how to use each for profit. So if you've been struggling in the market, if you're new and you need to understand which one to use, this masterclass is going to be for you. So make sure you guys click the link in my bio down below in the description to register for the masterclass. And December 30th, we will be hosting a free analysis New Year party to help you guys set up your charts for 2020 so that you guys can profit with us in the year 2020. Okay, so without further ado, let's get into the video. Okay, I don't want to go too long. All right. Now, this is Euro New Zealand dollar on the daily time frame, as I mentioned before. And what you guys will notice is on the price chart on the daily time frame, there aren't a lot of candles. The reason why there's not a lot of candles is because, for one, we're on a higher time frame. For me personally, I love teaching on the higher time frames. I like teaching people who don't have a lot of time to actually sit and analyze the lower time frames. And I love teaching people who want to actually hold the trade, not just for more profit, but for more time in life, for more time to do what you want to do. You're going to collect those profits. You're going to let the market flow and do its thing. So you don't have to babysit your trade. You have time to trade and do other things in life. If you're like me, you have a family, you get to spend time with your family. If you're like me and you like to read or do other hobbies and activities, maybe go to school, or maybe you have a demanding job, this is a way to free up a lot of your time and not worry about every little move in the market. Okay, so this is one of the ways I like to trade, and then also give back to other people who don't have as much time to trade. Okay, now just because we're on a higher time frame does not mean you can't use the same information on the lower time frame, and I'll get into that too. Okay, now we have a trend line that's going down, and as you can see, it is gauging the trend. We have lower highs, lower highs, lower highs, lower highs, lower highs, lower highs, and we're making lower lows. But it's my personal opinion, I feel like in a downtrend, the lower highs matter more than the lower lows, because guess what? The lower highs is where I really want to draw my trend lines, because that's where all of my trading decisions are going to come from in a trend continuation movement, in a trend continuation analysis, for me to enter and then take profit to the downside where the new lower lows will be made and met. Okay, so for example, 1, 2, third touch to the trend line. This was an area in which we can see how price hit the trend line again, gave a bearish engulfing candle, and it confirmed that price was still in a downtrend. I could have entered this area, and I did, on the daily time frame. I could have entered it on the 4-hour time frame, 1-hour time frame. It truly does not matter what time frame I entered in on, as long as I understood my bias, my confluence, the case that caused me to enter into the market. Why? For one, we're in a downtrend. I've already noticed that. For two, my structures point to continuation in the downtrend. Three, it hit my trend line, confirming we were going to go back down. As long as I understand these things before I enter into the market, the time frame really has no relevance. It's all about how I personally want to enter into the market. For me personally, like I said, everything is based on the daily time frame when I enter, right? And so this was a really nice trade to enter in. Now, if you're on a lower time frame, there's no need to drop down in order for me to see this. But this wick already showed me it rejected on a lower time frame, whether it was a 15-minute, 1 hour, 4 hour, whatever the case may be. We may have had different entry points, but the direction in which we were trading in were the same, okay? And as you can see, we're controlling the trend structure. And this is why trend lines are really important, because as long as price stays under the trend line, I am understanding that continuous lower highs and lower lows will be made. I'm understanding that I'm controlling what I see. And when I say the word control, I basically mean I control this trend line because I personally drew it on. You guys also see that I have indicators on my price charts, but I don't control the indicator. Meaning I can set the standard, but the indicator moves on its own. The system is already a built-in system. I can't control that. I can control the settings and the periods in which, it counts the previous candles, but I can't control how it moves and when it moves and why it moves because it's already set. But any type of structure that I draw onto my chart, I can control, okay? Because I'm controlling it as price moves. And I have no control over price, but I do have control over my eyes and what I put on this chart, okay? Now, we can also control the analysis. And what I mean is, if I'm looking for sales, my analysis needs to align with sales. My price charts needs to align with the sales, right? Because here's the thing, as long as I'm anticipating sales, well, guess what? Price has to stay under my trend line. And in the case it does not stay under my trend line anymore, well, guess what? My analysis has to change, or I have to reevaluate or tweak something along the way, right? So this is why understanding market structure with trend and price action, these three big elements in the market are very important, okay? And this is one of the ways in which you can use trend lines to help gauge the trend structure with your higher highs and higher lows and lows and lower highs, okay? We're in a trending market. This is a market condition and it's a market cycle, okay? So if you guys have any questions, make sure you guys hit me up down below in the comment section, or you can DM me and follow me on Instagram at SLFX Trading or _ trading. Make sure you click the link down below to register for the masterclass on January 2nd. And also make sure you guys click the link down below to register for the free webinar where we be doing analysis together. And if you're wanting me to personally coach you in the market, click the link down below to either get a one-on-one personal private session with me, or you can join the group coaching, okay? So I will talk to you guys in the next video.